Hello everyone, and welcome to this Specialist Trading educational presentation. Now I'm really excited to be presenting to you this today because I'm going to be introducing my brand new strategy. This is strategy number 10. Now I know a lot of you may be saying, well, Steve, 10 strategies, I mean, we can't trade that many. You always tell us just to focus on one or two. And why are we now being inundated with another strategy? Well, it's because the market has different environments. The market goes through different ebbs and flows. And if you've gone to my webinars before, you've heard me speak, I often relate the market as something like a river. Imagine you're going down a river, you want to traverse from one end to the next. The river is not going to stay the same the entire time of your journey. I mean, you may experience times where the river is very smooth and very easygoing. Other times it's just very flat like a pond. It's not moving at all. And then still at other times down the road, you may see the river have a lot of large rapids and very dangerous curves. So you have to be able to maneuver and find your way through each and every one of those scenarios. It's the same way with trading. If the market is like a river, it will go into different scenarios, from very difficult, fast-paced markets to rather slow markets to volatile to sideways to choppy markets. So you have to be able to maneuver your course through each and every one of those. Now, we've polled a number of our students, and here's what they've told us. They said, Steve, being out of sync with fast-paced markets often results in missed trades and or losing trades. So what we're going to be doing with strategy number 10 is specifically focusing on this problem, fast-paced markets. Now think of it. Have you ever been involved in a fast-paced market? You want to do something, but it's moving so fastly, and oftentimes you'll miss the trade, or oftentimes you'll get it at the wrong time and you'll turn what appeared to be a nice trade into a loss. For example, let's look at this older chart here in PDD. Now, this was in August. Now, it had a rather quick up move right here, and you're interested in purchasing this, but it's not at your level yet. Perhaps it's gone up a little bit too quickly for you. And then you decide to wait. And then you wait, and this happens. You have a large gap to the upside, and you say to yourself, boy, it's gone up, and now what am I supposed to do? So you say to yourself, well, you know what? That $10,000 class I took on candlesticks actually says that this is a shooting star, which is very negative. This is a reversal pattern. And since we gapped up here, we have a really large gap, this still may be okay to buy, but we're going to come down and fill that gap. So I'll place my order right here, and I'll buy when the gap is filled, okay? Stands to reason, and we talk about a lot of large, deep gaps. We have some strategies such as strategy number 9 and strategy number 1, which actually are involved with filling in gaps and buying these large pullbacks. So you decide to place an order down here. You feel this will be a great place to buy, and that way you won't have missed it. And then this happens, okay? The trade didn't pull back at all. It kept going higher and higher. So you say to yourself, well, that's it. I missed this trade. If the market is too fast for me, I missed it entirely. But did you really miss it? Because with the strategy I'm going to introduce to you today, you actually would have had a buy signal right here where you thought there was a negative candlestick pattern. You also would have generated a buy signal using strategy number 10. Remember, it's designed to capture these fast-paced markets. And let's say you had missed that setup right there. Well, there was another one generated right here and a one-day quick gain the very next day. All right, let's look at another example right here. This is in the QQQs because you can apply this also to ETFs. Let's say you wanted to short this. You think the market's going to go down very strongly, and you say to yourself, but it's a little bit too low right now. I'm going to wait for this little bounce. Right here, I'm going to short it, or maybe you're going to buy some puts. Right around this level is where your strategy or technique is telling you to go short. Okay? So you wait, and then this happens. You say to yourself, once again, I missed the trade because I can't short it right now because, in fact, it's right at some major support. I took that other $10,000 class on the institutions and on the volume spikes, and this is telling me I should actually cover. So how can I think of shorting now when, in fact, this is where I'd want to cover my short? So you say to yourself, well, if it's good enough to cover, it's good enough to go long, right? So maybe you want to buy. So you jump in and buy right here, thinking it's going to come back up to those old highs, and then it turns into a losing trade, right? Or was it a losing trade? Because strategy number 10 actually would have not taken this buy signal, but generated a sell signal in the exact same spot you wanted to go long. So this is the beauty of this particular method I'm going to be introducing to you today. It's designed to capture those fast-paced markets. And you're also going to see each and every one of the displays today, all the chart displays were generated using our new PTS Primo charting platform, the educational platform that actually teaches you how to trade these fast-paced markets. So welcome. This promises to be a great educational presentation today. Thank you for joining us and taking time out of your Wednesday. My name is Steven Primo, President and founder of Specialist Trading. I've teamed up with Pro Trader Strategies with one goal in mind, and that is simply to educate you as traders. I know a lot of you are saying, like, why would you just want to educate us? Why don't you just force feed us the signals and tell us what to buy or what to sell? Well, think of it. The entire industry is based on that premise of you going to a website and just finding out what to buy or sell on a nightly basis, either going to the chat room or just clicking on the signals and really not having any idea what these signals are based on, but just blindly following them, or else you listen to some guru on TV tell you what to buy or sell. If the entire industry is based on this, then why is it estimated that upwards of 85% of all traders fail? It's because that style of trading doesn't work. Our belief is that no two traders should ever trade alike. You should be taught for things to look for, high probability setups, but then apply your own ways in which to enter, in which to exit, and in which to place your stops. Well, the good news is this is what we teach you. We teach you all of these things: high probability setups, high probability exits, high probability stop placements, and high probability money management. And there are upwards of 6 or 7 different ways in which to implement them. But then we work with you so that you can decide how to exit, how to enter. You see, it's our belief that, once again, no two traders should ever trade alike. That's a recipe for disaster. You should simply be taught high probability educational techniques so that you can make your own trading decisions. Now, I've been trading for going on 43 years now, starting in a couple of months. I've traded through straight up, straight down markets. I've traded just about every method you can think of, any system, any strategy. So I know what works in terms of consistency and I know what doesn't. So why waste your time and hard-earned money searching for that holy grail when it's really right here in front of you? It's simply sound fundamental education. That's the service we provide. I'm going to show you our new strategy that you can take advantage of in a special pre-launch discount we're going to be offering, because this is still in the pre-launching phase. But before we begin, as always, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results. And by a lot, I mean a lot. I'm going to show you a lot of charts where a lot of these signals were generated, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. I'd also like to take this time to invite each and every one of you, if you haven't done so already, to follow us on Twitter. So please, our handle is @SPCLSTTRADG. A lot of great free information, a lot of great ways to find out what we teach and different things about trading. So please feel free to follow us on Twitter. Now, remember, our goal is not to force feed you signals. It's not to tell you what the perfect market is, what the perfect time frame is. I can't tell you how many emails I get. Students who already know our philosophy, that they also know that we're teaching them what to look for, but they still email me and say, Steve, what's the best time frame, or what's the best market I should be trading this on? Remember, that's up to you. These are things that you have to decide. There is no perfect market. There's no perfect time frame. The perfect market or time frame and the perfect way to trade is the one that makes you feel the most comfortable, because that is the only way you will become a consistent trader, not by blindly following someone else's signals. And I know this from firsthand experience, because when I was struggling 42 years ago, I was doing the same thing probably many of you are doing. I was, searching for the holy grail, for a way to make me retire in the next year, and nothing worked. My mentors were lucky enough to teach me the same things that I teach my students around the world in over 115 countries and in virtually every state. So this is what we do. We teach you the same things that have sustained me now going on 43 years, and hopefully they'll be able to sustain you as well. Now, since this is an educational class, you're going to see and be taught a lot today, but remember, I want to take each and every one of your questions, but I have a ton of slides to share with you. I have a great offer at the end of this presentation, so I don't want to take up the entire time answering questions. So if you have a question, please wait till the end of class. Okay, I promise I'll reserve the last 10 or 15 minutes for any questions that you may have. The only question I will answer is the most popular one, and that is this being recorded? Yes, it is. We record all of our webinars, thank goodness, because believe it or not, I had a problem with my microphone about 2 or 3 months ago on a Saturday webinar I was doing, and the first part of the presentation was completely not, well, it was recorded, but there was no sound. So we recorded the entire thing over again for you, so don't worry. We record all the presentations. If you have to leave early or if you're having technical issues, we will send you a link to this recording, okay? So once again, if you happen to have a question, we have a really good crowd here today. I'm thankful for that, but if we ask a question for every slide, we'll be here far too long, so please wait till the end of class to ask questions. Okay, with that stated, let's begin today's educational presentation. And once again, we're going to be introducing a very new strategy I'm very excited about, very proud of. It's strategy number 10. So let's share with you some of the highlights behind this brand new method. It's an entirely new short-term strategy. When we mean short-term, we really mean short-term. Now, what is that based off of? Well, it's based off of how we define the trend. If you're new to my presentations or if you're a student of mine, you've often heard me talk about you have to identify the overall trend. And we do that by applying the buy-sell line. Well, we're not going to use the buy-sell line. In fact, this is the very first method where we don't even consider the buy-sell line. And someone would say, but Steve, you're all about defining the trend, so how do we define the trend? Well, we're going to use our short-term trend identifier. That's the PET-D. So the PET-D is actually a part of this strategy. It's not a sideline such as the dynamic duo or the candlestick combo, something that you add on to an already existing strategy to increase its odds for consistency. This is actually a rule in the actual strategy. So the PET-D is going to define our short-term trend. Once we know what the short-term trend is, now we start applying the other rules of the strategy. I believe it has altogether a total of 3, and it does this by combining an indicator-based and a pattern recognition requirement. So these are all things that are included within the course. Now this strategy is designed to trade quick 1 to 5 bar trades, another aspect of short-term. So if you want to, this is perfect for getting in and out of those quick trades with those fast markets. Now, obviously, we have ways to stay in longer. If you're a member of mine in any other course, you'll see that we have other exits that are designed for you to stay in much longer if you should decide to do so. But the basic core of this method is to get you in and out quickly, all right? Because you're trading in and out quickly and you're trading this on the short term, it's perfect to apply with option trading because we're looking for these shallow pullbacks, these little sell-offs or little pauses within the real quick trend. We're buying and then getting out with a real quick profit, okay? So you can apply options to this. And you're in and out very quickly, so you won't have to spend a lot on premiums. Now we have 2 versions. We have an aggressive and a conservative version. Now the conservative version will generate less trades because you're trying to look for a better risk-reward ratio. The aggressive version will generate more trades. You'll be in and out just about every of the signals that are generated, but it has a less consistency. But it's up to you to decide which one you want to trade. Now, this is an ideal method if you already trade a longer term type of strategy. Let's say you like to trade, maybe weekly or monthly bars, or let's say you're just an investor. Oftentimes, when the market is really fast-paced, if you want to complement your already existing strategy, this is a great method, a short-term method to offset a longer-term investment, okay? Now, once again, with all of our strategies, it's all about consistency. I know what a lot of you think. You're thinking, well, consistency means that it has a lot of winners. Well, sure, but that's not really the prime definition of consistency. Consistency means that you are aware that you will have losses from time to time. And I will show you a couple of trade examples where there are some losses. But consistency means that you're able to recoup those losses. Remember, consistency is a 2-step forward, 1-step back approach. Now, sure, it also means that you'll have a lot of winners at times, but it's not guaranteed. What we're trying to instill is a method that has a 2-step forward, 1-step back approach, because two steps forward, 1 step back will sustain you. All right, not a fly-by-night method that does great for a couple of months and then gives it all back the next trade. That's not a consistent method. What we're looking for is a method that can recoup those losses, that you can have a nice, steady upward slope in your P&L, okay? So these are the highlights behind strategy number 10, our short-term strategy. Now, let's talk about the actual short-term setup process. Now, I can't give away all the rules because remember, there's only 3 rules altogether in this method, but let me just share with you the process, okay? The first thing you want to do is define the short-term trend. And what we do is we apply the PET D. We are not concerned with the buy-sell line. Now, if you want to apply the buy-sell line, that's fine. That can be a part of your conservative way of trading this. But there's no need to actually generate a signal. So we apply the PET D to determine the short-term trend. Now, we have a rather large group here today, and I know some of you are familiar with the PET D, but I know many of you are not. So let's just share with you a brief explanation. As we see here in this older chart of Aetna, we have a nice trend to the upside, but with most conventional ways of defining the trend, we really don't know that we're in an uptrend until roughly around here, right? Until we've made a higher high, all right? And just about the time that we decide we're in an uptrend, well, things change. So is there a way to really pinpoint the trend a little bit quicker? Not to, pick the top or bottom, but at least to define the trend a little bit quicker. It is with the PET D, because the PET D is a color bar tool. And when you have a series of green bars, it tells you the short-term trend is up. A series of red bars defines the short-term trend is down. So you see how we knew well in advance with a series of green bars that we were going higher. And we knew well in advance with a series of red bars that we were going lower. So as it states, in my over 4 decades of trading, the PET D is the best tool I found for capturing the short-term trend. So the PET D is going to tell us which direction the trend is. Once we define the trend, now we look for either buy or sell setups. In order to define a buy setups, we want to identify a shallow pullback. Now, a lot of our strategies are pullback strategies, such as strategy 1, such as strategy 3, also strategy 9. But what they're usually doing is defining a medium to deep pullback. What we're going to be looking for is a shallow pullback. That's a 1 to 3 day sell-off in a short-term uptrend. All right, that's where we will find our buy setup, where we have the combination of the pattern and of the indicator. Now, if we're looking to sell, obviously the bars will be red, and we want to identify a shallow pullback. That's a 1 to 3 day bounce in a short-term downtrend. Remember, our other strategies are looking for medium to deep pullbacks. Maybe they'll take 2 weeks or 10 to 20 bars to complete. What we're looking for here is 1 to 3 days, okay, usually on average. All right, so let's look at some strategy number trend examples in action. Now, a lot of these setups will be from the last month or two, but also towards the end of today's presentation, we'll share with you some setups that happened within the last week, okay? Once again, if you happen to have any questions, we have some people that just joined us. Please wait till the end of class, and I'll answer all your questions. All right, let's look at this example in SHAK, S-H-A-K. We have a nice upward market, but at this point we have a little rollover, and someone would say, well, that's looks like maybe we're going to come down here. That chat room I went to says that we've hit some resistance, so I think I'm going to sell, okay? So maybe you want to sell thinking it's going to come back to these lows, but what's the first thing we want to do? We want to find out what the trend is. So we apply the PET D, and we see that the short-term trend is up. Now remember, we never want to go against the short-term trend in this particular method. We always want to be in sync with the short-term trend. All right, now that we see that the trend is up, we're not going to sell at all because the bars are green. Even though this is a down day, if I backtrack, we see that we have a down day, but the PET D colored it green. So that's just a down day in a short-term uptrend, okay? That's similar to having in the middle of winter, as we're getting close to the fall and winter months, that's similar to having a warm 90-degree day in an overall or a short-term winter scenario where we're actually going to be much cooler in the next day or so. It's the same thing. So if we apply the rules to this particular method, we see that we're not going to actually sell. We actually are generating a 1 day pullback. So that 1 day pullback is where we apply the process and we look for those requirements to be met, and that's actually a buy signal. So you have the choice to take this if you want, and as you can see, you have a very nice run-up in SHAK. The stock roughly went from roughly 89 to 98, 9 points in 2 days. You think you would have done well if you purchased calls or maybe even purchased the stock? Let's look at another example here. This is the one we started off with in the QQQs. Remember, you wanted to originally short, but it went down. You never got a chance to get in. You missed the trade. Now it's at the support level. All right, this is the Fibonacci support that you studied, and you say, wow, I can't sell here because this is major, major Fibonacci support. This is where all the institutions are buying. So I might as well be a buyer here as well. Good enough to cover, good enough to go long, right? What's the first thing we do in this method? One of the first rules is we have to know the short-term trend. We apply the PET D and we see that the short-term trend is down because all the bars are colored red. Now we have a couple of up days, one up day here, another up day here, but look at the outline. The outline is red. So this is just telling us, like the weather, this is just a hot day in a winter month. And look how long it lasted. We had an up day here, it went down the next day. An up day here, it went down the next day. So this is not, we're not saying that just because you have an up day, it's going to go down again. It's just showing you that they don't have a lot of consistency. So since this bar is red, we are not in any way going to go against the short-term trend. We're not going to buy. So we wait to see if the other requirements are met of the combination indicator pattern recognition strategy. And yes, they are, because this is a one-day pullback. The requirements are met. And so we actually have a sell here that's generated by strategy number 10. Now you have the choice to take this, but it would have been a good idea if you did, because in the next 2 days, the market fell, and actually the Dow Jones fell over 1,000 points in 2 days. You think you could have done well with some puts there, okay? This is why we say this is a great a variable if you like to trade options as well. All right, let's look at letter O here, okay? We have a nice run up in this. Looks like maybe we're rolling over, but all the bars are green. Now we have a 3-day sell-off from the highs here. So that's a shallow pullback, 3 days. The strategy generates a buy signal. Now here are different ways to trade it. You could actually go in for the long haul and try and get as much bang for your buck. You would have basically purchased this around 76, 77. You have a nice 4 or 5 point gain. Or if you wanted to, every time you make a new high, you could exit. Wait for another setup to be generated right here. You make a new high, you exit. Wait for another setup to be generated here. Another one here. You make a new high, you exit. It's up to you. I'm just sharing with you different ways in which to trade this. Here's an example in Apple, an older chart going back to May in Apple. As you can see, obviously, we've been in a downtrend. So there's really nothing to figure out here. We know we're in a downtrend. But as with so many students, they've been taught methods that have no levels of consistency. Why do I say this? Because I was taught the same thing. I used to trade divergences, and I lost a ton of money trying to figure out how they work. There's no reason, in my opinion, to trade divergences because they're too subjective. For example, you could have said, well, we made a low here and then a lower low here, and it was not confirmed by the indicator or the tool I use, so this is a major divergence. This means that I should be buying. But look at the trend. The trend is down. We don't ever want to go against the short-term trend. That's the first rule in strategy number 10. We use the PET D to determine the trend. So if the PET D is telling us the trend is down, we do not want to buy. We want to be a seller. Strategy number 10 generated a sell signal here, and look what happened. So you see how this works. This is a great way. You could have taken a short, quick profit or stayed in longer. It's up to you. Now another signal was generated right here. So if you wanted to get out really quickly, you could have shorted this roughly about 187, gotten out with a new low right here, roughly about 179, waited for another setup, got short around 178, and got out around 170, potentially. It's up to you. Here's an example in HAL, letters H-A-L. All right, we have a nice run up, but someone could say, well, it looks like it's rolling over, but what is the short-term trend telling us? All the bars are green. So this is a shallow pullback, a 2-day pullback. All right, we created the high here. Now we have a 2-day lower lows. A buy signal was generated using strategy number 10. And in 2 days, you had a nice profit right there, okay? If you wanted to exit, potentially it's up to you. Now remember, with our other strategies, we're waiting for the price to come all the way down here or so for a nice median to deep pullback. If you're waiting for that, many times you'll miss the trade. That's why we created strategy number 10. Here's another example in AYI. All right, now this is an example that can be taken both ways. If you have one of our very tight stops you may have lost money on this trade. But if you use another one of the stops that we teach you, you actually would have had a nice profit. For example, this is kind of a sideways market, but if we apply the PET D, we see here that the last 4 bars are red and 2 sell signals were generated using strategy number 10. Now, if you used a very tight stop, you most likely would have been stopped down. But if you used one of our median stops where you went against the old high back here, well, look what happened. You would have still been in the trade and been able to capture anywhere roughly of 25 to 30 points in the next few days. Look at how well you would have done in the short term. In 1, 2, 3, 4, 5 days at the most, that's a roughly 25 to 30 point gain, okay? All right, let's look at WEC. We have a nice short-term upward move. We have a 1-day sell-off. Here's the buy signal using strategy number 10. And you could have had a nice little gain here. Let's say you use the short-term exit where you wait for a new high to be established, where you're out of the trade, okay? Maybe you made a good 3 to 5 points, and then you wait for another setup, but nothing happens. So this is why we say it's up to you to decide how you want to trade this. Some traders want to be in and out quickly. If you want to stay a little bit longer, we have ways to show you how you could have stayed in this and captured upwards of 10 points. All right, let's look at SHOP, okay? Obviously, in a downtrend. But let's say, you're studying this and you say, well, Steve, this is major support. I took that class where in the institutions and that indicator is telling me that there's major support here because the institutions are buying. That's why we have a double bottom right here. I can't go against the institutions because they're always right? Trust me, I traded with the institutions when I was a specialist on the floor of the exchange. They used to give me their orders. They're probably one of the least reliable sources I ever traded with because they were constantly entering orders and then they were canceling them and taking them out, then re-entering them with a different price limit, a different amount of shares. There was no way to tell what they wanted to do. So I would never base a trade off what institutions are doing. I mean, they're very unreliable. If you look at their track record, they don't do very well. Why don't we just listen to what the market's telling us? Because the first thing we want to do is not buy, but be in sync with the trend. And the last 6 bars or 5 or 6 bars are red. So that's telling us the actual trend is down, the short-term trend. So if we apply the rules to this particular method, we're not going to buy. The rules actually generated a sell signal. So where everyone else was thinking we have major support, we're actually selling because we're in sync with the trend and the strategy generated a 1-day pullback. It met the requirements of the remaining rules and we could have had a nice quick trade here. Let's say you want to be in this trade for the short term, which is the basis for this particular strategy. Well, basically you would have shorted it roughly about 350 and the stock now made 25 points in 3 days. That's not a bad trade if you had puts or if you were able to be short. I know it's expensive stock, but if you had puts, 25 points in 3 days is not bad. But let's say you wanted to stay in longer. Well, we show you how to do that. You could have potentially captured upwards of 65 points in less than a couple of weeks. All right, now we can apply this to weekly charts as well. Here's a very strong uptrend in MANH, okay? MANH. Now this is going up very strongly. At this point, let's say you're saying, well, gosh, I can't buy it now. In fact, it looks like it's rolling over. We've hit some resistance. The stock is rolling over. Maybe it's running out of gas. If I'm long, I should exit this, or if I'm thinking about getting long, let me wait till it gets down to this major support level right here, okay? Remember, we don't look at those things. There's no consistency. If this is going to go higher, you don't want to miss it. We add the PET D, and the PET D is telling us, yes, it's in a strong upward short-term trend, even though it's a weekly chart. And what do we have here? We have a short pullback. One buy signal was generated here, one was generated here. If you want to miss this trade, well, enter an order down here. But if you want to take advantage of this and not miss the trade, it would have been suggested to enter your orders on these 2 setups because look what happened to the stock. Basically went from 66 up to 90, a good 25 points roughly in the next 2 months coming into July, August of this year. How about to the downside? Here's a weekly chart in BBBY, okay? Obviously, we're in a downtrend. There's no way to dispute that on this weekly time frame. But what do we have here? We have a bullish hammer, all right? Remember you took that candlestick course? This is very positive. Why? Because this is a reversal pattern. This is a bullish hammer at the bottom of a strong downward trend, right? you were taught to buy these because this is very strong sign that the market is going higher. I traded the same way 42 years ago. I couldn't find any consistency in trading candlesticks this traditional way. All right. So what do we always look for? We look for the short-term trend first. And if we add the PET D, the short-term trend is down. We never want to go against the short-term trend. I don't care what candlestick pattern is being generated. So if we don't listen to this candlestick pattern and listen to strategy number 10, there was no buy setup here. There was actually a sell signal generated on the same bullish bar there. Had you taken that, well, look what would have happened, okay? This is what we mean by strategy 10 not missing these quick, fast-paced markets, because this is a very strong, fast-paced market to the downside. Had you waited for this to bounce or, God forbid, thought it was a bottom, you would have lost a lot of money or missed it. But this is a great way to either get short or even exit the trade if you were long. All right, let's look at MPC. This was in mid-September coming into October of this month. Obviously, a very strong upward move here in just less than a couple of weeks. But maybe you say to yourself, well, it's gone up too quickly. I don't want to buy this. It's in a really strong, quick uptrend. And then look what happens. We have a breakdown. So I'm not going to buy this because this is actually breaking down. For all I know, we're going to come all the way back down here. All right. This is the way most people are taught. This is technical analysis 101, right? Well, first thing we do is add the PET D. The PET D is the best trend identifier for the short-term trend I've ever traded with in my 42 years of trading. This is telling me it's not a breakdown. The trend is still up. And in fact, it's generated a buy signal using strategy number 10 on that one-day pullback, that very shallow pullback. And look what happened. You quickly went up in the next couple of weeks. In the beginning of October, you have a nice profit. Now, here's one way to trade this. Once you make new highs, you can exit somewhere around here. The new highs are generated. Wait for another setup to be generated on the next short-term pullback right here. Exit when new highs were generated. Wait for some more setups to be generated right here. And exit on those as well. You could have traded it that way or traded the one signal and held on for as long as possible. It's entirely up to you. Here's another example in CRWD. Okay, obviously we've been going lower. This is a bullish inside day. Okay, this is a very bullish pattern because the market is basically telling us we've made a low, we're coiling and getting ready to bounce. All right, that's what it usually says. What do we say? The trend is down. We're not going to even consider being bullish with a short-term downtrend. All the bars are red. So what does this mean? This means that a sell signal is actually generated on this shallow bounce to the upside. This is a shallow pullback. So rather than thinking about going long on that inside day, we're going to sell. And look what happened. The stock quickly fell from 55 down to roughly 46, about 9 points in about a week. Not a bad quick trade, right? All right, so let's go through the process now. XLNX. This is just this last couple of weeks ago, okay? Here's the strategy number 10 process before we go into the question and answer portion. Let me take you step by step. The first thing we want to do, looking back in hindsight, sure, it would have been easy to say, well, yeah, I wouldn't have bought this. I would have shorted this, right? Because we've been going lower, so you don't want to buy anything. But that's in hindsight, Steve. How did I know we were going lower? Well, the first thing you want to do is apply the PET D. And we knew well in advance, way up here before we even started to go down, that this was in a short-term downtrend. Even when we were going sideways, the PET D was telling us, don't buy anything, the short-term trend is down. Now, what we want to do is look for those shallow pullbacks. They're going to be bounces to the upside because we're only going to be selling on a little shallow bounce. Now, we also need a couple of requirements to be met. That's the combination process between the indicator and the pattern we're looking for. Once those requirements are met, we would have generated a sell signal right here. You could have taken advantage of this nice swing down. And if you missed that, guess what? There was another sell signal generated here. You could have taken advantage of this sell-off. This is how simple this process is. But if you have a quick, fast-paced market, either to the upside or to the downside, this is the strategy you need. Okay, so let's recap. Here's the process. Once again, the first thing we want to do is define the short-term trend. We're not going to use the buy-sell line. This is the only strategy we have that doesn't rely on the buy-sell line. Okay? You can use it if you want to, but we want to apply the PET-D to determine the short-term trend. If we have a series of red bars, as you just saw, the short-term trend is down. A series of green bars, the short-term trend is up. We never want to go against that. The second thing is we want to look for buys and a short-term shallow pullback. This is a 1 to 3 day sell-off in a short-term uptrend. Okay? If we're selling, we want to identify a shallow pullback to the upside. This is a 1 to 3 day bounce in a short-term downtrend. So once we identify those, then we want to see if the rules are met, the remaining rules. That's where we use the combination of a specific pattern along with a specific indicator. If those rules are met, a signal is generated. It's that simple. Now, once again, as our members have told us, being out of sync with fast-paced markets often results in either missed trades and or losing trades, because that's what will happen with fast-paced markets. Think of it. When the market was falling out of bed a couple of months ago, when it was just going straight down, everyone thought that was the end of the world, you most likely missed a lot of shorting opportunities because there were no real stops. It just kept going lower and lower and lower and lower. And it can work to the same way to the upside as well. The only trouble is when you have these strong downward markets, because they're fueled by fear, many times there will be no bounces. There will be maybe 1 or 2 bars and that's it. There won't be a good couple of weeks of bounces or anything for you to get short at higher prices. So strategy 10 is something you need so that you won't miss that. Now, we haven't had a really strong sell-off. Think of this. The market continues to flirt with brand new highs. What happens when we go into a downward market? That doesn't just last for a couple of weeks. It maybe lasts for a couple of months, maybe 6 months to a year. That's where you're going to need a strategy like strategy number 10. So ask yourself, 2019 is almost over. We just have a couple of months left. Do you think this new strategy can help your trading going into the next year? Well, we have a great offer, a great discount for all of you taking time out of your Wednesday to attend this special introductory presentation. We're going to give you a great offer on strategy number 10. This is our short-term trend trader. You're going to get this entirely new short-term strategy, which applies the PET-D. It's the combination indicator pattern-based method, complete course rules. You're going to learn how to trade it aggressively as well as conservatively. Remember, the average trade lasts anywhere from 1 to 5 days, but if you want to stay in it longer, we'll teach you how to do that. It's perfect to apply to option trading because of its short-term basis. And on top of that, you're going to get educational correspondence. We're going to give you a chance to get in an early bird discount because remember, we're still in the pre-launch phase. No one has traded this other than yours truly. I've been the only one trading this. It's a great, great method for trading the short-term trend. But we're also going to throw in what you've seen all of the chart examples on. This is our PTS Primo charting platform that actually teaches you how to trade those fast-paced markets. We're going to throw in 12 months completely free. Now, you don't just get strategy number 10 with the PTS Primo charting platform. You're also going to be getting the strength of trend feature. This is a great tool that I developed with Pro Trader Strategies that oftentimes can tell you when a trend is running out of steam. It would be perfect to use with strategy number 10. You're also going to get over 90 of the most prominent technical indicators, automatic exit levels that we have defined for you, just one of our many different ways to exit a trade, which includes personalized tech support. We have great testimonials about our great tech support department that can many times resolve many of your tech support issues in a matter of moments. But I think the best thing about the PTS Primo charting platform is our signal scanner. It is so simple and so easy to use. You can scan through literally hundreds, if not thousands of charts each night in just a matter of minutes. Let me show you how simple this is. Here's a page of our scanner. Once you scan for whatever market, whatever data you're interested in scanning, from European markets to Bitcoin to commodities to futures to S&P 500, you'll see a series of green or red bars as you see here on the right. The green bars are simply buy signals in that corresponding stock, and the red bars are sell signals. Now let's say you became a member of the Strategy Number 9 course with the platform, and you scanned, let's just last week, okay? Let's just say last week you scanned for some signals. Well, here's what you could have found. Okay, here was a setup in Apple. This was just last week, actually last Monday in Apple. You see here that Apple has had a really nice strong move to the upside. Okay, but looks like it's rolling over, right? A dark cloud cover right here, and it starts to go lower. All right, looks like it's topping out. Maybe going to come down, fill this gap, so you're not sure what you want to do. But you apply the PET D and you see that all the bars are actually green. So there's actually no reason to think that the short-term trend is down. The short-term trend is still up. Now, if you had scanned using our scanner, you would have seen that there was a buy signal generated on the 16th, okay? So the 16th, which was just literally a week ago today, you could have purchased calls, you could have purchased the stock, but either way, you had a nice trade because Apple generated a 9-point gain in 5 days. I took this snapshot just a few hours ago. This is a chart coming into today, what Apple has done. Now, that's just one of the things you could have scanned for. What about this trade? This was a scan also last Monday in KSU. All right, the stock's been going up. Kind of just paused right here. It has an inside day. All right, maybe you're thinking it's going to go down. Maybe it's not going to do anything. You apply the PET D and you see that, well, the trend is up. The last 4 bars are green. So the short-term trend is up. That's a one-day pullback. You scan for these setups, and you would have seen on our scanner, on our platform, that a buy signal was generated last Monday to go long KSU. Now, we realize it's an expensive stock. You could have bought calls on this, though, or some type of spread strategy with a bias to the upside. And 17 points in 1 week coming into this week. 1 week, 17 points. Not a bad trade, right? These are things that happened in the last week which you could have taken advantage of. Think of all the setups that may be occurring in the following weeks. So be one of the first to take advantage of this entirely new strategy. You owe it to yourself to start out 2020 in the right direction. All right, so let's break down the cost and the great discount we're going to offer you in strategy number trend, our short-term trend trader. Now, our early pre-launch special pricing, this includes with the PET D, is usually costing $49.95. What we're going to do for all the attendees today is discount that price. We're going to discount it so that you save $500, okay? We're going to drop the price to $44.95. So you're going to save $500, includes the PET D, also includes the PTS Primo charting platform, only $44.95, and you're going to be able to apply a small deposit to this. So if you want, you can put down a small deposit and still be up and running with a pricing plan with this as well, if you can't come up with $44.95. Let's say you already are a member of ours and you already have the PET D. So our early pre-launch sale for people who already own the PET D is usually going to be set at $34.95. We're going to discount for all the attendees today down to $29.95. So if you already have the PET D, you're going to save an additional $500. You're only going to spend $29.95 for this. You can still have a payment plan. Just as the first option, you can have a payment plan. So you don't have to come up with $29.95 if you don't want to. You can put down a small deposit and you can still be up and running. Remember, both of these options, the discounts with both of these, include 12 months free of the PTS Primo charting platform. So this is a great, great offer in our pre-launch sale. Here's how to take advantage of this. Contact Pro Trader Strategies. I developed and designed the platform with them. They're in charge of all of our tech support, along with all of our discounts and pricing for all of my courses. You can either email them. I would suggest calling them directly at area code 310-598-6677. They would be happy to answer any questions concerning pricing. They can work with you to develop and set up some type of payment plan. So you can just come up with a small deposit. You can still be up and running, okay? Now, the link you see at the very bottom is the link that takes you to the sign-up page, as well as more information concerning strategy number 10. Now, that's not a live link, but we've posted a live link in our chat box on the far right-hand corner of the GoToWebinar column, so you can click that one on in the chat box. So I'm going to leave this information up here. I know a lot of you have questions, so if you do, now is the time. Please sign on to the question and answer box right now, and I will answer the questions. Franco asks, is this strategy applicable to futures and Forex? It is, Franco, but you know what? It works, in my opinion, since I've been testing this for about a good year, it works much better for stock trading. And I would say it works much better for daily bars going higher, okay? Now, if you were to apply this for futures or for Forex, I would say apply it no lower than like a 4-hour chart for the Forex markets, and no lower than a 1-hour chart for the E-minis, okay? Because because of the fast-paced markets in the short term, the way this is defined with the combination indicator pattern base, you may get whipsawed a lot if you go down to a smaller time frame, such as a 5-minute or a 10-minute. because of the way the stock markets are, put together, I've seen much, much better results with stocks and daily bars and weekly and even monthly. Okay, so I would recommend or suggest this is a much better stock trading technique. Okay, but you can still apply it to futures and forex, but don't go for those strong short-term markets. Okay, anywhere from a 4-hour for the forex to a 1 hour for the E-mini. Okay, I hope that answers your question. Wow, missed the webinar. Is this recorded? Yes, we record all of our webinars, so don't worry, you will get a link to this. But remember, this is a special pre-launch sale. They both come with some really nice discounts, a $500 discount, including the 12 months free of the platform. That may not be included once we're out of the pre-launch sale. So this is a great way to get involved and be one of the first to get on the ground with this strategy. Remember, if we go into a really fast market, either up or down, this is the complementary method you want. Think about it. How many times have you said, gosh, I missed this trade. The market just kept going up, or the market just kept going down and I missed it. I wanted to get into it, but it didn't reach my price level. This is a great complementary strategy to have if those are the type of things that you've been experiencing lately, okay? How long will this discount be going? Well, remember, we're in the pre-launch phase. I would contact Pro Trader Strategies. They're in charge with all of our discounts as well as the tech support. They would be the one to contact for any of that. But we're going to give you all a link to this recording, so feel free to watch it as often as you like. But don't sit on this offer, because what happens so many times with a lot of our students, they'll get the recording that day or the next day. They'll watch it. Maybe they'll wait for the weekend to watch it. They'll think about it. They'll watch about another week maybe. They'll watch it a little bit more. And then 2 weeks to a month later, they'll say, okay, you know what? I think I'm ready to do that. I've lost too much money trading my own stuff. And then by that time, the offer is over. And then you're paying a good $500 to $1,000 more probably. And then on top of that, you're not getting the offer of the platform perhaps. So you don't want to miss this. If you're really interested, if you want to take your trading to the next level, here's something I think you'll really be interested in, and we're offering you a great discount. And you have payment plans to work with. So if there are no further questions, I would really strongly suggest at this point, if you're on the fence or if you just want more questions answered about the payment plan, there's absolutely no obligation. Contact Pro Trader Strategies. Call them directly at area code 310-598-6677. There are qualified trading consultants manning the phones right now. They would be happy to answer any question you have, absolutely no obligation, and you can feel a little bit more comfortable to think about it for the next couple of days. But remember, you are in no way obligated to purchase anything, but if you sit on this for a week or longer, this offer may already have dissipated and you may be spending a lot more money. So call them with no obligation and they would be more than happy to answer anything. As we take one last look at our disclaimer here, getting ready to close this presentation, remember, contact Pro Trader Strategies. This is the information that can answer any question you have. And remember, I just want to say, this is a strategy that's great to complement any market, any stock market, any direction, and fast markets that's really moving that you may have missed, or if you're an option trader, this is a great complementary strategy to have as well. So as you're looking at our disclaimer, I just want to say thanks for taking time. I really look forward to having you as a student of mine in the pre-launch phase of our new strategy number 10 method. Thank you so much for attending. I wish you the best of luck, and I look forward to all of you becoming students of mine. Thanks a lot. I'll see you next time. Bye-bye.